Kitco Mining's special coverage of the Precious Metals Summit is brought to you by Inventa Capital.
FPX Nickel announced an updated resource estimate this month. I'm with CEO Martin Turenne. Martin, welcome back to Kitco.
Thanks, Michael.
It is a pleasure to see you in person.
Indeed.
I want to get to the resource estimate in a minute, but just refresh us again. What is FPX focused on?
Yeah, FPX, a Vancouver-based company working on the development of a very large-scale nickel deposit in central BC called Baptiste. It's at the PEA stage, and the next major milestone for us is a preliminary feasibility study, which we expect next year.
Now, we talked to you early in the year. Bring us up to date and tell us about the resource estimate.
Yeah, so that culminates quite a bit of work in terms of infill drilling, as well as sort of a new approach to the resource model. And what that has led to is a slight increase in nickel grade, which is great. It's a big, bulk tonnage, open pit style deposit. So any increase in grade, even the 6% increase that we saw in the indicated category, is very significant to the bottom line, and we know it's going to materially sort of drive better project economics going forward.
Talk about the mineralization. What are you focused on there?
Yeah, so it's a different type of nickel mineralization that is what is common. It's not a sulfide, it's not a laterite. The nickel is hosted in a magnetically recoverable mineral called awaruite, which is a nickel and iron alloy. There's no sulfur in the host rock nor in the mineral itself. The mineral is very highly magnetic, and so it lends itself to a very simple flow sheet that leverages that magnetism as well as active surface properties that are amenable to flotation. That allows us to produce a very high nickel concentrate, around 60% nickel content, whereas typical nickel sulfide cons are more in the range of 10 to 15%. And so that product we produce is really a premium product, again, achieving higher recoveries than typical low-grade nickel sulfides, and a product that is more readily amenable to going into the EV battery supply chain.
I want to talk a little bit more about what you're doing in FPX, but I just want to leave that for a minute because you're always paying attention to what is happening broadly on the macro scale within nickel. What were some of the developments that you would say are the key developments that have happened since we talked early in the year? I think of for instance, BHP Billiton taking a run at Oz Minerals, for instance. So.
Yeah, I mean, certainly what we're seeing in terms of corporate activity and our own discussions with corporates is that, large diversified mining companies are uniformly bullish on nickel. A few years ago, nickel was like a four-letter word. It was something you wouldn't dare kind of mention in their presence because they just had no interest in it. Now I think they're all interested in all the future-facing commodities. And, if copper is probably first on the list, I think nickel is a close second. So we've started to see a lot of more corporate activity there. The nickel market itself is actually in slight oversupply this year, but despite that, we still have a very tight market in terms of very low inventories. And I think the market is just conditioned at this point to being more bullish on nickel than it has been probably over the last 10 years. And that's leading to very high nickel price, over $13 a pound, probably not supported by current fundamentals of supply demand. But I think on a forward-looking basis, that's kind of what is driving some of that nickel price action.
I would have thought that there would have been more action in the nickel space just with Russia being knocked off with Norilsk Nickel.
Yeah, I mean, that's been interesting because the LME has had a long conversation about this as to whether they would ban, the acceptance of Russian metal into LME warehouses. They've recently announced that they will continue to accept it. I think informally, some customers or consumers of nickel are not buying Russian nickel right now. But for the most part, the Russian situation in the Ukraine has not materially impacted on supply demand of nickel. That Russian nickel, in the worst case, can always find its way to China, who are always going to be willing buyers of it. So it hasn't had as profound an impact as I think some might have suspected when all of that started.
Any concerns around substitution because LFP's lithium iron phosphate batteries, which are, I believe, light on the nickel, they seem to be, how would you say, gaining more penetration or more acceptance in the battery space?
They are, and I think that's actually a good thing for nickel. And so we need a real mix of battery chemistries. If we're going to fully move to electric vehicles in all jurisdictions around the world, we can't rely solely on high nickel chemistries. We just won't get there, or we won't get there in anything like the type of timelines the governments want to see. So a mix of chemistries is good. What it means is that the place of nickel in those high performance batteries, I think, is secured because the nickel price will not run to such unconscionable levels that would lead to longer term substitution. With LFP versus NMC or other high nickel chemistries, it's going to come down to sort of trim levels. In the same way you can buy an entry level vehicle with more basic amenities in it, you'll probably have an LFP battery in that entry level vehicle. But if you want the high trim sport model or the luxury model, it's going to have the high nickel battery, which gives you that better performance. So I think it's great sort of to diversify that.
Yeah, it's kind of higher energy density or something like that, or you get longer range or something.
Yeah, you can't get around nickel. Nickel is what gives the battery its highest range potential, and so unless you want to come up with something new on the periodic table, you're not going to replace nickel.
Yeah. Talk about the support that you've seen from the government side. So there was the Inflation Reduction Act, which happened late in the summer, which I've seen a lot of junior companies or resource companies rather have leapt on that. Jervois, for instance, Sierra, Piedmont Lithium, for instance, really helping them develop downstream processing plants. We've also seen what has actually happened in Canada. We saw the announcement regarding infrastructure and then also some helping on the flow through. Maybe sum up what you're seeing that's been supportive in the space.
Yeah, this is a key theme. I don't think investors are enough attuned to it yet. It's going to result in a dramatic lowering of the cost of capital for companies involved in pushing forward critical minerals projects in many different ways. There's going to be direct funding. The U.S. Department of Defense is actually going to be co-funding feasibility studies on critical minerals projects in the U.S., but also projects that are located in Canada and Australia. So that could cover up to 50% of feasibility study costs for a project like ours. You have the Inflation Reduction Act that is forcing U.S. automakers to ensure that their critical minerals supply chain is going to be based on U.S. or free trade ally sources. That's going to cut out Chinese and Russian supply of nickel to that market. So that should put a premium on Canadian and Australian nickel production. Canada has been, frankly, a bit of a laggard in terms of what the federal government has done. But I think the Inflation Reduction Act was a massive wake-up call. Our discussions with federal government officials in Canada has confirmed that. And I think in budget 2023 in spring of next year, there's going to be a lot of goodies for the critical minerals mining industry. And it's something I think to keep a keen eye on as we go into next year.
How about the machinery of government? How about the time for permitting? How about responsiveness? And then also there was an announcement regarding infrastructure. Are you seeing roads being built? Are you seeing there's going to be better help with electricity?
Yeah, I think they're going to do some investments to assist infrastructure on selected projects. Senior government, officials, the Deputy Prime Minister talking about wanting to shorten permitting timelines. The fall economic statement increased the budget for hiring of more bureaucrats to help with making that process more efficient, which is great. But easing permitting is easier said than done. Hiring more bureaucrats is great. The mining industry tends to be at the sharp end of reconciliation with First Nations peoples in Canada. I think the mining industry is increasingly doing a better job in that regard and really playing a leadership role in Canada. I'd love to see more government support of Indigenous nations in how we can better collaborate with them to give them more capacity so that they can understand our projects.
That's a good segue. Talk about your community relations right now in central British Columbia with Baptiste.
Yeah, so our project sits on the traditional territory of two First Nations, the Binche-Wuten and the Clausen First Nations. We have agreements in place with both of them that cover the exploration and development phase. We've enjoyed good relationships with both those groups, but that's something that has to be earned each and every day with our actions. And as the CEO of the company, it's something that I place at the center of my plate. We know that is first and foremost, developing those partnerships is fundamental to the ultimate success of the project.
What's your funding situation right now, Mark?
Yeah, we've got about $7 million Canadian in the bank, so we're fully funded well into 2023. We're looking at some opportunities right now for potential sort of strategic investment from larger entities, so that may be something we may have news on here in the weeks or months to come. So stay tuned for that.
The other development also was a CO2 lock. Can you describe what the company is, how that's relationed with FPX? And I think you took on a new CEO, or you had an announcement regarding that this summer.
That's right. So CO2 Lock is a subsidiary of FPX. It's majority owned. We've also raised money for that entity from third-party investors. CO2 lock is designed to pursue opportunities in geological carbon sequestration. So certain types of rocks out there will naturally sequester CO2. The objective of CO2 lock is to gain mineral tenure and title to those most prospective rocks, and ultimately to develop the engineering processes that would result in operating large carbon sequestration sites at low cost to help kind of mitigate, the effects of carbon dioxide emissions and hopefully, reduce the planet's temperature in due course.
Lastly, milestones over the next 12 months, Martin.
Yeah, significant milestones for us on Baptiste, on our main project. We're currently operating a pilot plant, so really a focus on de-risking metallurgy. Those results should be out in January. That's a major de-risking event for the metallurgy of the project. We also have done some additional drilling at our Van target. That's a new discovery that we made last year. We did some step-out drilling this year. Those results will be out, and ultimately all of this on Baptiste is working towards that pre-feasibility study by the third quarter of next year.
Martin, thanks for sitting with me.
Thanks, Michael. Appreciate it.
My name is Michael McRae with Kitco Mining. I'm at 2022 Precious Metals Summit, Zurich.
Kitco Mining's special coverage of the Precious Metals Summit is brought to you by Inventa Capital.